All right, guys, welcome back to another episode of 5 Minute DD. Today we're talking about ticker XYLD, the Global X S&P 500 Covered Call ETF. So for those that are new to the channel, 5 Minute DD is a series I've been doing where I jump in and do a bunch of research, and then I give you kind of the bullet points of what I find within 5 minutes. If I can keep it under that, I never really can, so we'll see how long this video goes. But as always, if you could like and subscribe, that helps a bunch, and drop a comment on the next stock you want me to talk about in 5 Minute DD. I'm planning on doing QYLD next. It's another popular covered call ETF, but we will see. So some of the pros for XYLD. This is the oldest of the covered call ETFs, I believe. It started, this has it in 2013, but I do believe it is older than that, maybe about 2013. But made monthly payouts for 9 years straight. That is extremely impressive. When you're thinking about the amount of money they've paid out in that 9 years, it's quite wild. Monthly dividends, I love monthly dividends. I know that you're still getting the full annual dividend amount that you would with a normal quarterly paying dividend stock, but still, I love getting that monthly income. High yield of 12.56%. So XYLD and QYLD both have pretty high yields, a little bit higher than JEPI, which I have a video out about JEPI. I have a 5 Minute DD on that one too if you want to go check that one out. It paid out a $5 annual dividend last year. So looking at the 1 year chart, starting the year off is about $50. So you're looking at a solid 10% dividend payout for last year. And now with the price going down, that yield will be a little bit higher, but you are still losing some of that price value. So some like that, some don't. If you're scooping up more shares at these lower costs, that in my opinion is a good deal. But again, this isn't financial advice. So expense ratio of 0.6%. So a little bit high for an expense ratio. I think JEPI's is like 0.35. So that's still pretty low. I think the average for ETFs is about 0.7. But you should calculate that in, and you should think about that when you are looking at covered call ETFs to see which one is right for you, because that could add up over a span of a couple of years even. So this is a very good investment in uncertain markets. They say that themselves. All of this information, by the way, is being pulled from their website, the XYLD Investor Relations portion of their website. So they talk about how this is an extremely good investment, which of course they're going to say it's a good investment, but they specify that in times of uncertainty in the market, which is, in my opinion, exactly where we are. We've been downtrending for quite a while, and I think that we're going to kind of stay in this zone for a while, to be honest. I'm expecting another year of this kind of up and down, not really sure where we're going. I don't think we're looking at a crazy dip, but I don't think we're going to make a run anytime soon. Could be wrong, not financial advice, but we will see. So it is really good in that for just that consistent dividend returns. If the market does dip a bit, you will lose out on some of that because the price value is going to go down. If it shoots back up, you are going to miss out a little bit again because this will not appreciate in value price-wise. That dividend will remain, but it won't appreciate in value as fast as, say SPY, the S&P 500, or even the NASDAQ in a good market. So that's the point of these, is just consistent returns in any kind of market. 8% dividend growth. This is relatively low. I think it's calculated over the last 3 years. So their growth hasn't been good, but growth over the past couple of years is still impressive in my opinion, because these markets have not been easy on these stocks. I think JEPI had like a 14%. So again, it's much more competitive, but it is a little bit riskier because it is newer. So XYLD does have that history with it, which I love looking at this max chart. So the max chart honestly is interesting, down 2% all time. So if you're asking me, when I'm looking at purchasing this stock, this is a time. It could go back down lower, of course, but averaging down, if you bought it in the 45s to 50s, it doesn't have a history of kind of bouncing back and running to those points again, depending on how the market is doing. So crazy that it went to 37 with the pandemic crash, 35. So we still have a little bit to fall to meet those levels. If it did fall through that, I would start to get worried. This is their top holding. So they do, those that don't know covered call ETFs, they write covered calls and then cash in and pay those cash that they make off the covered calls out as dividends. And that's how they're able to pay monthly dividends. So this is what kind of their top holdings, which it's very interesting. Apple, Microsoft, Amazon, Tesla, Berkshire Hathaway, Google. So tons of tech, Johnson & Johnson, which is kind of funny. Tons of tech, big names. Tesla is one of my favorite stocks. Amazon's absolutely insane. Really destroyed recently in price, but that's kind of shows where this stock has been trending with their main holdings. So let's jump into the cons really quickly. XYLD is one of my favorite covered call ETFs, I will say that because of the history that they have and that consistent return, I think is extremely impressive. So, they've been doing it for almost 10 years now, and they've consistently paid out the dividends. So that is really, really important to me. But don't let that affect your opinions. Always do your own research. Let's talk about these cons. Doesn't perform well in steady increasing markets. So if you think that we're going into a bull market right now, this is not the time necessarily for you to buy this stock or to buy a large amount. You could always buy some for a hedge, but this is not the kind of stock that you're going to, like Tesla in a bull market would far outperform XYLD. But again, you're not buying this for that share price appreciation. At least I don't. Small dividend growth potential. That's probably the main negative I have for XYLD is the dividend growth. 8% is really low. And I shouldn't say really low. It's just not as high as I would like it to be. And so with that, long term, more dividend growth is always a great thing. But looking at the stock, again, I wouldn't invest all of your money into one thing ever. And of course, dollar cost average down, you're going to get good returns. And even with that smaller growth for the dividend, you will still get good returns and potentially with price appreciation too on top of that. The con is price appreciation. So looking at the max chart, we are down 2% all time. So the price appreciation is not what you're buying this for. If you bought this on insane dips and then sold on some rips, I'd say that's a good idea. You could make, let's say you could make 10% on a rip on this one with the dividends during that period. That's not something that I would use this stock for. Because if this is ripping and the rest of the market is ripping, you should have your money somewhere else in the market because you're going to make more unless you are holding this for the dividend. So that is it. Let's see. I kept it 6.5 minutes, a little bit over, but I hope this was valuable to you guys. Again, as always, like and subscribe if this was useful information to you. I'm trying to grow this channel pretty quickly. I'll be posting consistently. So stay tuned and thank you for watching this video.